Drew, it's always great to have you here, especially on a jobs day. This is a big jobs report because everyone is, but how important is it to solidify the overall jobs narrative in America? It's still a very good job market, right?
It still is. You know, we're actually hoping to see a little slowing because what you really want to see at this point is a very sustainable pattern. And I think, you know, given the job growth we've been seeing, we've been wondering who's filling these jobs. There's just been a tremendous amount of job growth. You see the participation rate continuing to move higher. When you combine the unemployment rate and the participation rate, you're seeing that the labor capacity is actually becoming relatively tight. So you'd like this move down actually to a more sustainable level.
So one of the things that we've often talked about with regard to jobs numbers, it's not just the number of jobs created or the unemployment rate, it's the effect on average hourly earnings. We have not seen any huge, massive spike in wages across America. But is it something that we should be keeping a closer eye on now, given the fact that the labor market has seen so many months now of being as tight as it has been?
Well, we should. I mean, it's extraordinarily tight right now. And, you know, one of the things we do look at, though, are the quits rate. You know, like how many people quit their jobs every month? Because we know people who quit their jobs get paid more than people who stay in their jobs, you know, for obvious reasons, right? So what I think what we're still experiencing as an economy is this fear from 2008. And I think it permeates people's mindsets. If they were in their career in 2008, they remember what it was like, that risk of being laid off, even if you were doing a good job at your job. And I think that makes people unwilling to quit when people believe we're nearing the end of the economic cycle.
So are we near the end of an economic cycle? I remember, I bring it up because not that long ago, we were talking about the idea that there were so many road signs out there that we might be pointing towards a recession at some point over the last year and a half, that we were due for one. Is there any chance that we do see a recession in 2020 or beyond?
Well, our view right now is that we'll see a recession in 2021. I think what's happening, though, we're not looking for something giant. It's not going to be 2008. If that's what you're thinking, you're not even going to notice this one. But everyone has begun to focus on a recession to the point where it's kind of like, if you ever woken up and thought about how many stairs you're walking down instead of just going down your stairs, and of course you always forget one or something and you fall, that's what we're going to do, in my opinion, as an economy. We've just focused so much on it being a recession that we're not paying attention to kind of the basic block and tackling. And I think what it means is that eventually we'll see a slowing in job growth. It'll turn into a minor amount of layoffs, but it'll be just enough to kind of push the consumer into a more cautious environment. And with everything else going on, you kind of tumble in.
All right, so let's talk about the consumer. You brought it up. It's the key season for retailers and for the consumer as well. Can the American consumer, this time around this holiday season and into 2020, continue to power the U.S. economy?
Yes. In fact, it will continue to power the U.S. economy into 2020, and the U.S. consumer will be the reason the recession is such a shallow one. But it will also probably be the reason we have the recession in the first place.
All right. Drew Matus, before we let you go, better or worse jobs number than expected, overall consensus?
Better.
All right. Drew Matus at MetLife, thank you very much.